Hi guys, it's your FX mentor Blaze Billion Dollar, and today we are back with another exciting tutorial on Forex. We are just getting started and things are getting heated up. I'm sure you're finding this interesting. So today we're going to look at the types of charts that we use in Forex, and we're gonna go deeper into understanding the candlesticks, or a few things that we use, understanding selling and buying pressure. So this is where the understanding of where to sell, when to buy starts in. So pay attention in case you've not been paying attention. So without wasting much of the time, let's get started. So price in the financial market can be shown in different ways. So how do you know a price is here, price is here? So it can be shown in different ways. So some of these ways are through the bar charts, the line charts, and through the candlesticks. So you find that Forex traders are always talking about the candlesticks and all that. These things are geographical representation of how the forces of supply and demand have been specific or over a specific period of time. So let us discuss the bar chart, the line chart, as well as the candlesticks. So let's start with the bar chart. Well, the bar chart is not something that I've used in the Forex market. I've never used it, but we have to learn it for the sake of knowing. So it has, it's simply a stick with two knobs, for lack of better terms, one on the left and one on the right. The knob on the left is actually the opening price, and the knob on the right is actually the closing price. Then we have wicks, which are found on top of both, on the top and on the lower parts of the knob. These wicks show the highest price that a certain asset reached over a period of time, while the lower wick shows the lowest price that a particular asset reached. So let's now see the picture. So this is a bar chart, and we said it has these two knobs, one on the left and one on the right. So we said the one on the left is the opening price, and the one on the right is the closing price for a bullish candlestick, right? Or a bullish bar. So for the sake of this, we're going to say green will symbolize something that is going up, meaning it's a bull or a rather bullish market. Then red will symbolize a bearish market, right? Yeah. So this is about the bar chart. The bar chart has this line. This is the opening price. This is the closing price. And these, starting from the opening price going down, this is actually a wick, or this part is called a wick or a shadow. So the same name applies to this part from the closing price going up where it has ended. This is the wick. So here, just at the top here, this is the highest that price went in that particular time. Then this is the lowest. This is the lowest price that an asset attained in a particular period of time. So when it comes to a bearish bar chart, the opposite is true. So if it's going down, the opening price will be at the top on the left, right? This is the opening price. Then the closing price will be at the bottom on the right, right? So we say the opening price is on the left and the closing price is on the right, right? And these are wicks, just like we said on the bullish bar. And this is what they look like when you apply them on your charts and all that, right? Yeah. So now the one interesting thing is that the candlestick is something that we're gonna be using. So I don't use bar charts, but I use the candlesticks every time to trade. So, and this is what we're going to probably stick to as we continue learning, right? So without wasting much of the time, let's talk about the candlestick. So the candlestick is not very different from the bar. The only difference is that the body is very different, unlike the bar, which has just a stick, some sort of a stick. But they all give the same information. So we're going to look at a picture of the candlesticks, and we'll try to dissect it. Sorry, I'm coming from the medical field. We use the term dissection, in order when you wanna, start learning about the parts of the human being. So you actually dissect the body, cut it and all that. Anyway, yeah. So a candlestick can be bullish or bearish. Something that is bullish is going up. Something that is bearish is going down. So with a bullish candlestick, the opening price is below and the closing price is above, while on the bearish candlestick it's the opposite. Yeah. So so the candlesticks initially originated from Japan. They can also be called Japanese candlesticks, and they can be bullish or bearish, and we're going to have an illustration. So if you open your charts and you see a particular candlestick and you're on a particular time frame, it simply means in that particular time frame, one candlestick is taking that particular time frame to be formed. So if you're on the 15-minute time frame, it means one candlestick is actually forming every after 15 minutes. If you're on the daily, it means the candlestick will be formed every after a day, right? Every after a day, another candlestick starts forming. If you're on the 1 minute, so it will be taking 1 minute for another candlestick to form and all that, right? Let's look at the candlesticks now. So this is a candlestick. And like I said, it is very similar with the bar, and they give us the same information. So this is a bullish candlestick here on the left. Yeah. And let's try to dissect it. So this is the high and this is the low. So this part from here to there, it is called the upper wick or upper shadow. Then this part from here to here, this is actually called the body of the candlestick. And from this body of the candlestick to this price down here on the low, it is actually called the lower wick. So on a bullish candlestick, the opening price and the closing price is actually shown by the size of the body. So when a candlestick forms like this and we have a body like this, here at the bottom, this is the opening price, and here, this is the closing price. So what do we mean by the opening price and the closing price? What we simply mean is that on a particular time frame, if the market has been moving and let's say after 15 minutes, another candlestick starts to form. So here is the opening price and it actually closed here. But how are these wicks formed? These wicks are formed due to the result of supply and demand, the powers of the bulls and the bears. I hope you remember these terms, right? So when price goes up, maybe what simply means for these wicks to be formed is that maybe price from here, it opened, then went down. After going down, it started going up past the level at which it opened and started going up. So once it passes that level, it leaves what we call a wick. And it goes up, reaches this particular point. And after it reaches this particular point, it starts to come down. So as it starts to come down and eventually closes below this highest point it went. So meaning it will leave what we call a wick. And that is what we look at as the wick. So let's look at the bearish candlestick. It actually gives us the same information. The only difference is that it has the opening price at the top and the closing price at the bottom. So you find that maybe when it opened, it started going up, then it rejected. So these wicks are just rejections, right? Let's call them rejections also. That's another term that we're going to coin these wicks from today onwards. So price gets rejected, falls all the way down, reaches this particular point, then gets rejected and closes at this particular point. So it leaves a wick there and it leaves a wick there. And of course, this is the closing price and this is the opening price. This is the body, these are the wicks. This is the low and this is the high. I hope you understand. So now the body represents the distance between the opening price and the closing price, like we've discussed. So a bullish candlestick would take one of the following shapes. You'll find that when you check on the charts, you find different and strange looking candlesticks. They're different, they look strange, all that. Yeah, right? Yeah. Others would have weird shapes and all that. Yeah. Then others would actually look fine. Right? Yeah. So now they can be in this, they can either be in this format, they can be in this format, they can be in this format, and they can be in this format. Right? So the principle is just the same. Here, these are just rejections. So here we can have a situation where we have a rejection at the top and we don't have a rejection at the bottom, or maybe just something small. Then we have these like this without rejections, then like this. These are some of the candlesticks you're going to see if you check on your charts. They come in different sizes and shapes. Equally, when it comes to bearish, candlesticks, they can take any form, and some of those forms are like this. Yeah, right? So now, let us now try to understand the selling and buying pressure, right? So you see, every time a candlestick opens and closes, it tells you something about what is really happening in the market. Pay attention, pay attention. It is able to tell you who dominated the battle. Others will say Forex is a battle of the buyers and the sellers. So it actually tells you, the candlestick actually tells you who was in charge on that particular time frame, right? So let's assume, the bulls and the bears are fighting, right? Then the candlestick, depending on how or rather who takes the victory, the candlestick is able to illustrate it in just, simple drawing, right? In just a simple drawing. And the opening price, the most important things are the size of the body as well as the rejections, right? That's all that matters. And from that, we're able to tell who dominated the battle, who is weakening, and who won, etc. So this information is there on the candlestick. The length of the body of the candle and the shadow or the wick of the candlestick tells the story of the buying as well as the selling pressure. To help you understand this concept, let me just show you some illustrations. So now, when we say a wick is simply a rejection, remember we introduced and said it's a rejection. So if something is rejected, meaning there's a disagreement. Remember, I said the candlestick will give you the information of who won at that particular time. Remember, I said for each time frame it has got its own candlestick, right? So let's look at this candlestick, right? Since we've learned about the candlestick, we have the opening price and the closing price. So what happened? Price went down, rejected, started going up. It went all the way to this level. And what happened? It dropped and closed below here. So now what does this tell? Since we said trading is a fight between the bulls and the bears, the buyers and the sellers, what does it tell you? It tells you the buyers were strong enough to take price all the way to that level, right? But then the sellers came in with full force. It's more like, I don't know if you watch wrestling. I'm a fan of Roman Reigns, and let's say we have Roman Reigns with maybe The Miz. I don't know. Yeah, sort of, right? And let's say Roman Reigns symbolizes the sellers. Maybe the Miz symbolizes the buyers. So the buyers manage to take price all the way to that level. And what happens is that maybe they start exiting the market. They start exiting the market, right? After they start exiting the market or more sellers come into the market, they manage now to drop price because the sellers are wanting that price goes down. So sellers come on board, a lot of sellers come on board, and they actually manage to drop price all the way down, right? All the way down. Remember I said the rejections can tell us a story and the bodies. So what this simply means is that sellers are in control. If a candle closed like this, it means the sellers won this battle. What can we say about this one? Here we can simply say the buyers won the battle, because this rejection, this big rejection, shows us, this rejection from the downward to the upward shows us that there was more buying pressure, because price was rejected. So we don't want this price, take it up. So the buyers were more than the sellers. So here, what can we say? Selling pressure was high, and here buying pressure was high. It doesn't really matter the color of the candlestick. What I want you to understand is the message that that particular candlestick is telling us. The color of the candlestick doesn't matter. You can use like the same colors for both, but for them to look good, use different colors and you'll be fine. Yeah. You'll be fine. Yeah. So the rejections and the size of the bodies would tell us a very good message, and we are able to capitalize on that. We'll learn how best we'll be able to utilize these candlesticks, or rather the rejections of the candlesticks, to give us signals on what to say or on what to do, either to sell or to buy. But basically that's about the selling pressure, and that is how the candlesticks help us in knowing to say this is a selling pressure, who dominated in this particular time frame, who is likely to do this and all that. And from here we're able to start making assumptions and all that. So that's about the selling pressure, and this is something that you can read. I've actually explained it. Yeah. So if the upper wick is long, it simply means that the selling pressure is high. It shows that when price opened, the buyers took the lead and pushed price all the way up, but they got defeated by the sellers and price ended up closing lower than it was pushed. So if the lower wick is long, it tells you that the buying pressure is high. It simply means the sellers drove price all the way down, but soon the buyers took charge and pushed it back, hence leaving a longer wick at the bottom. So this is just a summary of what I was explaining and all that. And if the lower wick is short, it simply tells you that there is minimal buying pressure. And if the upper wick is low, it simply means there was minimal selling pressure. So what does the candlestick body tell us? The candlestick body can tell us something. Remember I said what is important are the wicks and the sides of the body. So the size of the body of the candlestick tells us more about the volatility. The longer the body of the candle, the higher the selling and the buying pressure. A short body of a candlestick indicates little price movement, hence less buying and selling pressure. Low volatility, let's say low volatility. Let us look at the picture below and understand the concept, right? So we see strong buying pressure. If we have, remember those the short, always ensure to check these, so that you understand and relate them with this picture. The body is big, and the wicks are not, they are equal, some sort of. So this simply means the buying pressure is high, because this is a bullish candlestick, and it simply tells us to say it's high, right? And here, it's a bearish candlestick, and the wicks are kind of the same. It tells us that the selling pressure is high, right? Yeah. No doubts. So sometimes the candlestick will have no lower or upper wicks, but with very long bodies. These are interpreted the same way as standard candlesticks, but are even stronger indication of bullish or negative market sentiment. So if they don't have wicks and all that, depending on where the price opened and closed, we can say, okay, this was a strong bearish or bullish signal. Yeah. In the case of a bullish candle, the price never declines below the open. In a case of a bearish candle, the price never trades above the open. Let us see an illustration. So we have the open price here. If we have the open price and the closing price here, so it simply means, since we don't have wicks, it simply means price opened here and it started just going up, going up, going up, and it eventually closed there. And if we have this bearish candlestick, price opened there and closed there. So once price opened, it just started going down, falling, and eventually closed there, right? And this simply means it was dominated by the sellers, and this simply means it was dominated by the buyers. So let's look at the line chart. The line chart is also something that gives us information that we'll be more focused on. It actually, I don't really use it that much. I only use it when it comes to spotting support and resistance and certain patterns, as we are going to learn, right? Out of the three that we've discussed now, the candlesticks are the most used. So this is the line chart. It simply shows you the opening and the closing prices, and all that. This is a line chart, and that is how it moves. So it doesn't show you the wicks. And that concludes today's session. I wish you the very best. If you haven't understood, always ensure you get in touch. Always ensure you visit your notes. So that was it, guys. I remain your FX coach and mentor, Bliss $1 Billion.